it's me again. And I was combing through the news, looking for crumbs. I was looking for my breadcrumbs. And my good friend Ed sent this article to me from The Fool. And we all know what most people think of The Fool. But he sent it from The Fool. And first I was excited to see Tell in there. But I started reading it. And I noticed this. This jumped out to me like... So in this article, it states that... And the numbers are like so serendipitous. It's crazy. The numbers state that Marathon just sold Speedway. They offloaded Speedway for after tax. It netted them $17.5 billion. Now they bought back, $5 billion worth of shares, and they were just authorized to rebuy back $9.5 billion more worth of shares. That's a total of $15 billion worth of shares. That number stuck out to me like a sore thumb. Because... Okay. Orogrande. And I said this to somebody earlier today. And they were saying, oh, 20 billion. So I'm like, nah, the royalties keep it's going to be around 15 billion. Okay. 15 billion. That's like the number I pegged. So I thought this would be about a $20 billion sale. Royalties, if they bought the royalties. But if royalties don't sell... 75% of that is 15 billion. And you're like, roller pigeons, bird lady, how do you get at $20 billion sale? Well, you calculate out the price of oil, right? And the price of oil right now, if you did a really super discounted 10% multiplier instead of the 12%, 12 to 18, if you did 10%, it works out to being around 15. And then you account for the royalty holders. It works out to be about $15 billion. Do the math. Okay, this is take 2 on the math. I can't believe that, my previous math got deleted. Take 2. So, price of oil today is about $94 a barrel. Minus $28 cost of goods sold. That gives us $66. Right? And now you do a discount. I know 10 to 12%, but hear me out. 10% discount, right? Let's take it down to 10. It's a lot of oil. I don't go any lower than 10. I tell people conservatively, take it down to 10%. Other than that, you're negating the price of WTI. All right, it's $6.6 a share. I'm being conservative. But that's for all the oil in the ground. That's not counting for royalties. So 6.6 times 3.2 is 21.12 billion. We gotta take out the royalties. University Lands isn't gonna sell the royalties. Probably not. And McCabe is not gonna sell his royalties. So minus the royalty holders, you're left with $15.84 billion. And look at how much share buybacks they're doing. I know I said 15. I was excited. 15.5 billion. I know I said 15. It's actually, 15.5 billion. I got excited. But 15.5 billion, look, you math it out, it's like 15.84 billion is the price of the Orogrande. That's very close. That's why I got so excited, guys. I saw that number. I'm like, I know, I mathed it in my head real quick. I'm like, whoa. I was like, Zach Galifianakis mathing, probability statistics. Right? And you take out Torchlight's cut, 66.5%. So you're left with $10.533 billion. Now, if this is tax-free for Marathon, no corporate tax, multiply that by the holdback dividend, you gotta take that out, that 10%, you're left with 9.48. You divide it by the outstanding MMTLPs, 165 million, you're left with 57.45. If you divide it by 250, the oil co's, it's 37.92. I know that sounds high, but that's non-taxable event. Again, 29 to 46 if it counts for oil. And if it's above, 46, I told people I'm not going to be upset. I won't complain about that problem. But look, like $15.5 billion that they're buying here in the share buybacks. And that's 15.84. That's serendipitously close. There's still some strong evidence. I mean, there's still evidence that hasn't changed about ConocoPhillips and the whole drilling aspect being slow. I saw this. They sold Speedway. Now they're flush with cash. They have $17.5 billion. If they spend 15 and change to acquire this, they're still left with $2 billion for operating, or billion for operating expenses to develop it, or maybe even less. Who knows? But it could be pretty handsomely developed. Marathon, of course, has, its own refineries. It has its upstream, midstream, downstream. Marathon's not too much of a player in the Permian. Let me look up those Permian giants. It sounds like a celestial body, like a group of planets. Like you have the gaseous giants. Well, these are the Permian giants. Yeah, Marathon's not even on here. So, granted, Marathon, we thought about that before. They were doing buybacks. I'm like, a lot of people also would be happy with Marathon. This is, what stands out to me is the numbers. In this sale for Speedway. And this article came out Motley Fool in February. When did they sell Speedway? Let's look that up. They sold it to 7-Eleven last year. That's about time when that Torchlight merger happened, is when they announced this. Isn't that interesting? And then they talked about a probable sale. Remember that in the prospectus, and it's supposed to close within the year. That's really interesting. Now Marathon's doing buybacks, of course. But that's like, so they had this big giant sale. I'll tell you what, price of oil, 7-Eleven got a good deal then in May because oil is so cheap, to get this from Marathon. So yeah, they sold Speedway to 7-Eleven for $21 billion, and after the tax was taken out, it was about $17.5 billion that they had left over. Okay, so in summary, there's a lot of evidence that ConocoPhillips might get this. A lot of things lined up, and the fact that, sorry, just eating like these ginger snaps. I got really hungry. The fact that Maverick bought the old property. ConocoPhillips also does exclusive, its subsidiaries, like Concho, does exclusive operating developing. That's what NextBridge uses on their site. We exclusively operate and develop, its asset. So, if this was a buyout for stock with the NextBridge being the team or subsidiary of that company that runs it, this would be, Conoco or Marathon. Marathon based on when they started selling Speedway, when they sold Speedway. And when the deal closed and now they're doing more share buybacks. That's sort of serendipitous. And Conoco for the fact that it bought, the Shell asset, which was peppered around. But Conoco already had property right on the border of those Guadalupe Mountains. So they're, very familiar with the area. This is Conoco territory. I mean, nobody really drills there right now. But, who's closest to it would be Conoco. So Conoco is very familiar with the territory. Marathon's not one of the big Permian giants. As you can see on this chart, Marathon's not a big Permian giant, but Conoco is. Maybe Conoco wants to become king of WTI. They've certainly been offloading older assets, but they have this variable dividend now with increased production. So, you offload some older assets, you're going to have to get some newer assets, and oil is now at the time where oil companies in general want to prospect. You can't really prospect on public lands anymore. It's all private. So, in terms of, I guess, who my two companies would buy this out would be Marathon or Conoco. You get more marathons, but Conoco's, you get the special divvies. You get just about monthly divvies with Conoco. And then Conoco kind of matches price of oil, and our dividend is directly related to oil too. So, that's kind of proportionate. Another, the other possibility, of course, is the sponsored spin out with EIG backing this. And EIG owns half. And you get, 50% cash up front. However, we have not seen any 8K filings that would indicate a spin out right now. Meta said it's a wholly owned subsidiary, the spin out into Oilco, wholly owned subsidiary. But you'd still have an 8K filing about that. And there hasn't been any 8K filings about it. So what does that tell you? You can file an 8K filing after a sale is announced. Of course, you can announce it and then file the 8K. So that's just something to think about. I'm not saying it is Marathon, but I'm just showing you some evidence that kind of is a bit, it's very coincidental if it's a coincidence. There's mathematical backings to it. It could be Conoco, but this isn't really Marathon territory. This is more Conoco territory. So you have those factors as well. Marathon had said, of course, to the Fool that it's going into, diesel recycling, which I found interesting. It made me think of Camber Energy, CEI, and how they just acquired a diesel recycling facility. And Fool says, haha, diesel recycling is going to be the future. All right, the future's here, I guess. So that's just my findings today. I'm not saying it is or isn't. I'm just really, all I'm doing is showing you the evidence. This could be a potential other player to consider. If my personal opinion, if I had to, it'd be those two. I wouldn't really consider Exxon. Exxon could surprise me. That's fine. I would be pleasantly surprised too. But it's the numbers are there with Marathon, and the timing is right. The timing is very right on that Speedway sale. That's it for today, guys. I will see you soon. Goodbye.